Hey, my name is Jack. Thank you for taking a few minutes to explore the infinite banking concept with me. This is a financial strategy that you hear a lot of different opinions about online and in different circles. I'm at a company called Unbridled Wealth that has been using this strategy across 32 different unbridled companies for the last 10 years. And personally, I've been using this strategy for about 5 years. This process of overfunding a permanent life insurance policy and then borrowing against that to invest in five or six different assets that all have provided income streams for my family at different times. And that's really what most of my clients are after is how can we control our capital so that we can invest it and create income streams in the present that exceed our monthly expenses in more like 5 to 10 years rather than solely depending on a income stream post age 59 and a half from qualified plans like 401k or IRA. So how does this actually look? Here's an example of a person on the left side here, a saver, saving up their liquidity and free cash flow into a savings account or a brokerage account. You see in this example, they're working hard to build up. And then when they had accumulated $100,000, let's say they invest as a limited partner into a multifamily syndication. When that happens, their dollars stop working or growing in that savings account and they go to the syndication deal. Their bank account goes to zero and they got to start saving back up for the next major purchase or investment opportunity that comes along. The inefficiency with this is that they're losing out on their original $100,000 ability to continue growing for the rest of their life, while also investing in a deal like that. So if we change the place that we save our capital into the cash value of a specially designed permanent life insurance policy, we can both honor our original $100,000 ability to continue growing over the course of our life. 100 becomes 700,000, growing at just 5% annually over 40 years. But we still obviously want to take advantage of opportunities when they come along. To do that, though, rather than withdrawing from our cash value when an opportunity comes, we're going to borrow against it, a lot like a HELOC when you access a portion of your equity in your home. Cash value is kind of like the equity in your policy, but the life insurance carrier is willing to loan that money to you at 3 to 5% annually that you can pay back on your own schedule. In the case of a syndication, I have clients who just pay interest only on that policy loan each year, which that interest is a tax deduction because it's for an investment purpose. And then when that deal exits, let's say 5 years from now, they pay off the full amount of the loan, and then they can pay an additional premium to further increase their credit line. But while that money is in the deal, their original 100 probably goes to 140 or 150,000 over those 5 years. So rather than saving back up from zero as you make that money back to pay off the $100,000 loan, you're actually at 150,000 after that, assuming you haven't paid in more premium and further increased your cash value. So this process over the course of your life will recapture a ton of capital into your family's economic system. And beyond that, there's a ton of other benefits that come with permanent life insurance. Some describe it as like a financial Swiss Army knife. Some of those things are, well, for one, we structure this so that we're minimizing the commission of the agent and the death benefit as much as the government allows so that it still qualifies as life insurance, but it captures all this tax favorability because this has been around since before the tax code came out. But yeah, anytime you access money via a policy loan, that money comes to you tax free, even when there's gains on the cash value. That cash continues growing even while it's out in a policy loan. And then there's some long-term care protection built into it. There's creditor protection if you ever got sued for any reason, money in your cash value is off limits. It's a great volatility buffer in retirement and a way to pass on tax-free money to your heirs. So big picture, this is a very foundational tool for a financial plan. If you want to learn more, you can download the free guide or schedule a call with me to unpack your situation.